In this video, I'm going to share some tips with you on trading the 1 minute time frame. When you finish this video, head over to the first link in the description and sign up to my free trading course. This is going to give you even more insights into how you can trade successfully, and it's going to shift your mindset and your technical perspective of the market. It's totally free. First link in the description. Just drop your email in there and you will get that sent to your inbox. Hello everyone and welcome back to the channel. Today's video is an educational video talking about low time frame trading. Nowadays, many people want to trade the low time frames. We're talking the 1 and 5 minute time frames, carrying out that super precise intraday trading that you see everywhere on social media. The problem is most people can't do it. Even a lot of the people that will be showing you these 1 to 50, 1 to 100 trades can't do it themselves. The low time frame charts can be very tricky to work with, but it is possible to actually succeed consistently on low time frames when you have the right knowledge to go forward with. So in this video, I have 4 tips for you, and I'm also going to first of all talk about the pros and cons of trading the low time frames. So the first pro or con of low time frames is that there are more opportunities when you're trading the 1 minute than there will be if you're trading pretty much any of the time frame. This may initially sound great because it gives you more opportunities to make money, but it also gives you more opportunities to lose money and take poor quality trades. So depending on your mindset, this can actually be a blessing or a curse. Making sure you have all of the other things in check before going forward to the low time frames is obviously going to make the more opportunities that they give you a good thing. But if you go forward with, bad knowledge, bad education, and bad mindset, more opportunities could actually do more damage than good. Similar to the last one, but actually only a bad thing really, is that the low time frames have more noise. So what I mean by this is we have a lot more whipsawing back and forth action, whereas when we're on the higher time frames, we generally follow quite a clear trend. The reason for this is we are seeing the direct battle between buyers and sellers, so there is more pullbacks, there's more up and down moves within a structural move. This makes it a little bit trickier to trade, but can also give you some really good entries. So it can be a good thing to a degree when you can utilize it and understand when you should trade and when you shouldn't. And the last pro or con that I'm going to talk about is that the low time frames are very fast moving markets. Your trades are going to get triggered fast. When you do lose a trade, it's going to happen quickly. And when you win a trade, that's going to happen quickly as well. So this can be very high pressure. You may feel a bit of a distrust for the price action. And that leads me on to my first tip of today's video. Approach the low time frames the same way that you'd approach the high time frame. A lot of people, when they come to the low time frames, don't trust the price action and think that this could just do absolutely anything, right? We may just whipsaw back and forth, we may push higher, and people kind of disregard the importance of structure and the validity of supply and demand and structure on these low time frames. However, if you start to look at the low time frames as if they are the high time frames, such as if you are transitioning from 4-hour and 1-hour charts to the 1 minute and 5 minute charts, look at them in the same way. So just imagine for a moment that this is the 4-hour and suddenly we have a clearer picture. We obviously have got this large rally, which leaves open an imbalanced demand zone down here. We've then seen a structure break come in from this point down. And now we can obviously see a formation of lower lows and lower highs. So if we were looking at this on a 4-hour perspective, potentially we would look at this supply zone here, right? And it becomes a lot more clearer when you start to picture the low time frame as if it's the high time frames, because you have more trust in those higher time frames, because we are generally taught higher time frame is higher accuracy. A trade like this on a 4-hour time frame would be very much valid and probably something you'd be happier to take than if it was on the 1 minute. But if you allow the market to do its thing, you're going to see that very often it works in just the same way. The next tip is to make sure that you are trading relevant structure. This is one of the biggest problems I see people making when they are trying to trade these low time frames for the first few times, is that they are looking, for example, in a 4-hour supply zone for a 1 minute reversal. This is just not a good way to trade because you're not getting time frame relevant structure changes. You need to make sure that, for example, if you're trading the 4-hour, you need to see that the 4-hour structure is changing before your trade is confirmed. So on this example here, we can see Euro USD on the 15-minute time frame, and we can actually see that this is within a range, right? We have obviously the lows down here, the highs up here. We've got demand below, supply above, and we are trading in the middle of a range. Right now, if we were to, for example, sell Euro USD because of this efficient price area that we have just here, we would not be looking to take this down considerably through this high time frame price action. If we are looking at the low time frames, the 1 minute, the 3 minute, and so on, the only trades we should be looking for is either a push up to here or a push down to here, because we are trading in a larger range. So while the low time frames can provide some good trades, we need to make sure that we're trading them relevantly and we're not trying to push the market too far. There's no reason from a 1 minute perspective that we should break out of this range. What we should first see is for the market to actually come down, trade into here, then we could jump out. That is if an opportunity was given. And then from there, we could actually look, and if the market does break down, that is when we can then continue in. So the 1 minute structure is just simply going to be this move here. So that is where we will trade. Or on the flip side, if we're moving up, the 1 minute structure would take us into there. And then to actually continue any moves anywhere else, we'd need to see some higher time frame relevant structure. So for example, here on the 15 minute, if we did make a lower low, that would confirm a reversal, and then we could start getting in. So make sure you're actually trading relevant price action, which means just trading through the recent movements or to the next zones on the low time frames. And make sure you're not actually looking at, daily 4 hour, 1 hour supply zones and entering into those straight away with a 1 minute reaction before the time frame relevant structure, the daily, the 4 hour, or the 1 hour, has actually broken in your favor. So just really quick, we're looking at the concept I just spoke about. You can see here the demand zone is below, the supply zone is above. We are in the middle of this range. We are looking at that same example. After a structure break, we would not be looking to take the market considerably lower because there's no confirmation of a larger range break of structure, but we could certainly look for a pull down into this area just to actually fill some of this imbalance, obviously filling that time frame relevant structure. Tip number 3 is don't take loads of trades. When you're looking at low time frames, you're going to get sucked into the fast moving price action and you're going to see a lot of possible opportunities showing up. There are a lot of possible opportunities, but most of them are terrible. If you want to successfully trade low time frames, you need to meticulously plan each setup the same way you would if you were trading the high time frames. You don't just shoot into the trades and don't just focus on the direct structure breaks like this, because obviously, as mentioned, we do get noise on the low time frames. And if you start selling and then buying and then selling and then buying after every single structure break, you're going to have a hard time. So just because the market gives you a lot of opportunities doesn't mean they're good. It doesn't mean you should take them. Take time to meticulously plan your setups and avoid taking low quality trades. You'll make a lot more money taking one good trade than you will by taking 5 bad ones. My final tip for trading low time frames is to put volume in your favor and use it to your advantage. So if you remember back to this trade, this is a trade that I took on Tuesday. I shared the idea for it on Monday before it happened. And then on Tuesday, I actually showed that update video. I passed 2 funding challenges with this single trade. Now, the reason this trade went so well is because I used the volume in line with it. What I mean by that is trade high volume times where a lot of people are trading and there's a lot of movement in the market. The best times for this is obviously session specific. So if you're trading AUD, JPY, or NZD pairs, that's going to be in the Asia session. If you're trading GBP, USD, Euro pairs, that's going to be throughout the London and Europe session. If you're trading USD and CAD pairs, they're going to work very well throughout the New York session. So by putting the volume in your favor, you can actually get some very good trades. Now, let's say I was to buy Euro back here. You can see, obviously, I would have had a very bad time, especially with tight stop losses. Probably would have been taken out multiple times here. But because I actually waited here and actually execute my trades throughout the London session and throughout the morning for me in UK time, where there's a lot of volume, I get the volume on my side and I actually get to trade the high volume movements and the big pushes in the market where a lot of people are trading and a lot of orders are going into the market. And if you start to bring volume and you start to bring timing into your trading, you can actually catch these fast movements and the areas in the market where the big movements are happening, which means for the low time frames, you can avoid getting stopped out in all of this choppy noise and you can actually take advantage of the areas in the market and the timing in the market where the large pushes are going to show. So that brings us to the end of the video. As a quick recap, here are my 4 tips for trading the 1 minute time frame. First of all, approach those time frames as if they are the higher time frames. My second tip is to trade relevant structure. Tip number 3, don't take loads of trades. And my final tip is to use volume and timing in your trades, just like this example we have here on the chart. So those are my 1 minute trading tips. I hope you found this video valuable and I hope it gives you some beneficial tips to move forward with so that you can achieve better performance and better results when trading the low time frames. So thank you for watching and I'll see you in the next video. You can fast track the learning curve and learn my full 1 minute trading systems in my trading academy if that is something you want to do. You won't have to worry about working things out for yourself and you'll have my full guidance along the way. You'll get instant access to my full trading systems and you'll see the processes in action day after day in the trading community. So if you're serious about this and you want to take it to the next level, head over to the link in the description and you can sign up right away.